Imagine waking up one morning and finding your dollars suddenly worth a fraction of what they were yesterday. Sounds dramatic, right? But behind the headlines and the reassuring speeches, there are troubling signals that the US dollar's dominance could be slipping faster than most people realize. Today, we're pulling back the curtain on the hidden signs you need to see before it's too late. If you care about your savings, investments, or just the stability of the economy around you, this is a video you'll want to watch until the end. The US dollar has been the backbone of the global financial system for nearly a century, but times are changing, and not necessarily in America's favor. Let's break down what's happening, why it matters, and how it could impact your everyday life. A brief history of the dollar's power. To understand whether the dollar is collapsing, you have to look at why it became so powerful in the first place. After World War II, the Bretton Woods Agreement pegged global currencies to the dollar, and the dollar itself was backed by gold. Even when President Nixon took the US off the gold standard in 1971, the dollar remained the world's reserve currency. That meant countries all over the globe needed dollars to buy oil, conduct trade, and build up reserves. This dominance gave the US incredible leverage. It could borrow cheaply, sanction adversaries, and print money during crises without immediate consequences. But as the saying goes, what goes up must come down. Over the past decade, new cracks have formed in the dollar's seemingly invincible foundation. The rise of alternative payment systems. One of the first hidden signs of trouble is how more countries are trying to bypass the dollar entirely. China and Russia have developed their own payment networks, like CIPs in China, as alternatives to the SWIFT system, which is dollar-centric. The European Union has floated the idea of creating a rival to SWIFT to avoid US sanctions. Even more telling, countries like Brazil, India, and Saudi Arabia have started trading oil and commodities in other currencies, especially the Chinese yuan. That's a big deal because oil trading in dollars, known as the petrodollar system, has been a cornerstone of dollar demand. If this trend keeps growing, fewer countries will need to hold dollars, weakening demand over time. Record US debt and the debt ceiling. Another red flag is America's ballooning debt. The US national debt recently surpassed $34 trillion, and it's growing by billions every day. To put this into perspective, that's more than the entire GDP of China and Japan combined. The debt ceiling debates you see in Congress are not just political theater. Every time the US gets close to defaulting, it rattles confidence in the dollar. Foreign governments and big investors start wondering if the US is really as stable as it claims. When trust erodes, the value of the dollar can take a hit. And let's be honest, no serious plan exists to pay down this debt. Instead, the government relies on issuing more treasury bonds, which are essentially IOUs backed by the promise that someone else will keep buying them. But what happens if the rest of the world gets tired of funding America's deficits? Inflation eating away at confidence. You've probably felt this one personally. Between 2020 and 2022, the Federal Reserve printed trillions of dollars to keep the economy afloat during the pandemic. While this stimulus helped avoid an immediate depression, it also unleashed the highest inflation in 40 years. Prices at the grocery store, at the gas pump, and in the housing market soared. Though inflation has cooled somewhat, it remains above the Fed's 2% target. Persistent inflation chips away at the dollar's purchasing power, and people start losing faith that their money will hold its value. Remember, the strength of a currency depends as much on perception as it does on hard numbers. If enough people start believing the dollar is a sinking ship, it can trigger a self-fulfilling cycle of decline. The BRICS Challenge. Here's another hidden sign that doesn't make the evening news as often as it should. The rise of the BRICS nations: Brazil, Russia, India, China, and South Africa. This economic bloc has been aggressively working to challenge the dollar's supremacy. In August 2023, the BRICS announced plans to expand their group by adding more countries, including Saudi Arabia and Iran, and discussed creating a common currency to settle trade. If this currency ever materializes, and that's still a big if, it could threaten the dollar's role in global trade. China and Russia, in particular, are leading the charge to de-dollarize their economies. They're signing agreements to settle oil and gas sales in yuan and rubles. This erosion of the dollar's monopoly on trade settlement is a slow-moving threat that could accelerate in the years ahead. Central bank digital currencies. You've probably heard about Bitcoin and other cryptocurrencies, but central banks are launching their own digital currencies too. China already rolled out the digital yuan to millions of users. The European Central Bank is developing the digital euro. Even the US Federal Reserve is researching a potential digital dollar. At first glance, this might sound like a sign of strength, but it also signals that governments don't trust the current system to last forever. A digital dollar could make it easier for the US to enforce sanctions and track transactions, but it also introduces new risks. If people lose confidence in paper dollars, they could switch to digital assets, or even other nations' digital currencies, further chipping away at the greenback's dominance. Gold buying and currency hedging. Another telling sign is how central banks worldwide are buying record amounts of gold. In 2022 and 2023, central bank gold purchases hit levels not seen in over 50 years. Why does this matter? Because gold is the ultimate hedge against a collapsing currency. When central banks in China, India, Turkey, and Russia load up on gold, they're essentially voting with their wallets. They're preparing for a world where the dollar isn't the only safe haven. You're also seeing more investors diversify into commodities, real estate, and even cryptocurrencies to hedge against potential dollar weakness. The US losing the soft power battle. For decades, the US didn't just have economic might, it had cultural and diplomatic influence that made the dollar the natural choice for trade and reserves. But that soft power is waning. Global surveys show declining trust in US leadership. Countries sanctioned or criticized by Washington are more motivated than ever to look for alternatives to the dollar. And as America becomes more polarized internally, with bitter debates over elections, debt ceilings, and spending, the rest of the world notices. Political instability at home translates to less confidence abroad. When you combine this with economic challenges, you get a perfect storm that could weaken the dollar's role over time. What a dollar collapse could look like. Let's be clear. Nobody is saying the dollar will vanish overnight. A total collapse is unlikely in the near term because the US still has the world's largest economy and military, but a gradual decline is already underway. If the dollar loses reserve currency status, Americans could see higher interest rates as foreign buyers demand more return for holding US debt, more expensive imports because a weaker dollar buys less abroad, rising inflation as the cost of goods and services climbs, less geopolitical leverage to enforce sanctions or project power. In the worst-case scenario, this could trigger a crisis of confidence that snowballs into something much bigger, like what happened in Britain when the pound lost its reserve status after World War II. So, is the US dollar collapsing? Not quite, but it is undeniably under pressure from multiple angles. The hidden signs, rising debt, the decline of petrodollars, de-dollarization efforts, inflation, and digital competition, are all pointing in the same direction. The dollar's golden age may be ending. If you really want to protect yourself from the dollar's potential decline, you need to think beyond just stuffing cash under your mattress. Diversification isn't just some buzzword your financial advisor throws around. It's your personal safety net. That might mean holding a slice of your savings in other strong currencies or classic safe havens like gold and silver. These assets have a habit of keeping their value even when paper money loses its shine. You could also look at investments that have historically outpaced inflation. Think real estate, certain stocks, or even well-chosen commodities. The idea is to build a financial shield that isn't entirely tied to the fate of the US dollar. And don't underestimate the power of simply paying attention. Staying informed about global politics and economic shifts can give you the edge to act before the crowd does. Above all, remember this. Just because the dollar has been king for decades doesn't mean it always will be. Empires rise, currencies fall, and history rarely repeats itself in the exact same way. But it does tend to rhyme, so prepare accordingly. Thanks for watching. What do you think? Is the dollar's decline inevitable, or will it bounce back stronger? Drop your thoughts in the comments below. And if you found this video helpful, hit that like button, subscribe for more insights into the economy and investing, and share this with someone who needs to see it. Stay prepared, stay informed, and I'll see you in the next video.